I think that silver is now viewed as much more critical and crucial for industry. We see investment demand, of course, ebb and flow, but there's at least anecdotally some in the last couple of months, we've seen some tremendous stories about people flocking to bullion dealers and buying silver. But the mining executives now, I think they can be more confident of higher and sustained higher silver prices. So they'll be more willing to commit to exploration, to expansion, to acquisitions. And it's a small space. So I think that's important. The critical metal, critical mineral side of silver, I think, is absolutely a new dimension that has been added to the silver sector. In the U.S., they have a critical minerals list as we speak. To my understanding, it's only on a list where silver is being considered along with other metals to end up potentially on their critical minerals list. So it's being reviewed and considered, partly because of the government shutdown that could take a little while longer to get a final answer on. So we don't know. Will that happen? Will it not happen? I think it's significant just that it's been added. This is the first time it's been added to be for consideration. What we have seen, one thing to keep in mind too, Ernest, is that 43% of all of the silver consumed in the US is imported. So nearly half of all the silver they consume, they have to bring in from other countries. So they're certainly not self-reliant when it comes to silver, far from it. And again, sort of an aspect of critical minerals and what we've seen happening. And it's interesting, how you've pointed out that the solar aspect of silver was a more sort of widely seen way that everyone was kind of on board, and it might have been more partisan in some ways. It was encouraged more by some administrations and so on. But this fact that silver may be considered more and more as a critical metal is something that I think all parties are going to be on side with. The world's becoming deglobalized. It's becoming more regional. We've seen in the US, the administration has taken steps that we have not seen happen for a long time, where they've started to buy into companies. And, we've seen that a little bit on the tech side, but now we're seeing it on the mining side. They're taking meaningful positions in companies that have critical minerals. Lithium, for example, copper, for example. They're starting to streamline permitting. They're making it easier for these projects to come on board and eventually get built out and produce. We're seeing a lot of support politically for critical minerals and silver potentially in particular. So that absolutely is a new dimension. And I think that is just one more thing that makes sustained high silver prices just that much more likely. So we've seen since, I believe it was June of last year, we've seen a bottoming in SLV, which is the largest silver ETF. We've seen a bottoming in its silver holdings. They've started to climb on balance ever since then, continue to climb. So that's a definite change in mindset. We've seen anecdotally, bullion dealers are being overwhelmed. In China, in Singapore, seen it in Egypt, for example. People are waiting in line. They want to buy silver bars, silver coins. What I find interesting is the numbers. So the Silver Institute forecasts that this year we're going to be somewhere around 200 million ounces of demand for physical coins and bars. I feel that that's kind of low. That's about equal to industrial demand for solar alone. So a little bit of perspective. Solar takes about 200 million ounces of silver. Let's start at a little bit higher level. Again, I think it's useful to understand sort of the big picture. There's about 1 billion ounces of silver supply every year between mining, about 85%, and recycling, about 15%. Mining has been flat, in fact, down over the last 10 years. Recycling has been flat for 10 years. So we're not seeing any new meaningful silver come to market from either of those. Where we could is if silver prices are high enough for long enough, where we've got silver being owned by individuals and others, they may start to sell it back to the market and help with supply. But for now, we haven't really seen that happen. So silver supply is flat, demand is growing. Demand is at least 15% above supply, so 150 million ounces above. Solar takes 20% of all of the silver. Jewelry takes 20% of all of the silver. And investment demand is expected to take 20% of all of the silver. As I say, I think that investment demand, when we get the numbers for 2025, I think that that will have been lowballed. I think that it's going to end up considerably higher. And interestingly, the Silver Institute does not include ETF silver in its calculations for demand. And their reasoning is that, well, this is silver that's held in an ETF. It's not consumed like industry or like jewelry. It could easily flow back. And my argument is, so is physical silver, investment silver, silver bars, silver coins, and yet those are included. And so I can't square that. But if you include the demand that's flowing to silver ETFs, then the market balance, in other words, the overall deficit, is going to be the third highest deficit in the last 10 years. So that changes the perspective. And that's why I think that it's one of the reasons I think that investment demand is being underestimated, underappreciated by the market.
Silver is no longer just a precious metal. It's now a strategic one. I think this is one of the most important changes we've seen in the past few years, and it fundamentally alters how investors, governments, and industries view the silver market. For decades, silver's reputation was tied almost exclusively to jewelry, coins, and a kind of poor man's gold narrative. But that story is outdated. Today, silver is increasingly recognized as critical, not just for investment demand, but for national security, industrial production, and the global energy transition. Let's start with what's happening in the US government. For the first time ever, silver is under consideration for inclusion on the US critical minerals list. That might not sound dramatic, but it's a monumental shift in how policymakers view the metal. Traditionally, this list is reserved for resources deemed essential to economic and national security, things like lithium, cobalt, and rare earth elements. The fact that silver is even being considered tells you that the world is waking up to its industrial indispensability. Now, because of the partial government shutdown, the review process has been delayed a bit, but make no mistake, the fact that silver is on the list for consideration is a huge development in itself. For decades, silver was seen as abundant. Now the conversation has shifted towards scarcity, dependence, and strategic vulnerability. And for good reason. The United States imports about 43% of all the silver it consumes, almost half. That means the US is far from self-reliant when it comes to this critical resource. Think about that for a second. This is a metal essential for solar panels, semiconductors, batteries, electric vehicles, water purification, medical instruments, and advanced defense systems. And yet the country that leads global technology and military innovation must import nearly half of its supply. That's a national security issue, plain and simple. And it's not just a US problem. Around the world, silver supply is stagnating. Global mine production has been flat to declining for nearly a decade, and recycling hasn't grown at all. Every year, the world produces roughly 800 to 50 million ounces from mining and recovers another 150 million from recycling. That's about 1 billion ounces total demand, however, is running 15% higher than that, around 1.15 billion ounces per year. That's a structural deficit of roughly 150 million ounces annually. When you start with a deficit that large, it's only a matter of time before inventories get squeezed. And that's exactly what we're seeing. The Silver Institute's own data shows 3 consecutive years of deficits, and yet prices haven't fully caught up. Markets are slow to recognize structural changes until they're undeniable. What's remarkable is that investment demand, coins, bars, and ETFs, is now matching industrial demand categories like solar and jewelry. The Silver Institute estimates that both solar energy and jewelry each account for about 20% of total demand, and physical investment another 20%. But I think that's conservative. Anecdotally, bullion dealers around the world are seeing unprecedented buying pressure. In China, Singapore, and Egypt, dealers report long lines of customers waiting to purchase silver bars and coins. It's the same story in Europe, and the US premiums are rising, inventories are thin, and in some places, retail demand is overwhelming supply. Even large-scale investment vehicles are showing a shift in sentiment. Take SLV, the world's largest silver ETF. Its holdings bottomed out around mid-2023 and have been steadily climbing since then. That tells us that institutional investors are quietly returning to the silver trade. They're positioning early for what they see coming. This makes perfect sense when you consider what's happening in industry. Silver is no longer a nice-to-have metal, it's irreplaceable. It's the most conductive and reflective metal on Earth, and it plays a critical role in every major growth industry of the 21st century. Solar power, electric vehicles, 5G networks, and next-generation electronics.
Can silver really go higher from here, given that we're at almost all-time highs?
So my short answer is yes, absolutely. And to qualify that a little bit, if you look at the last two times that it reached 50 or close to 50, 1980, 2011, both of those times we had parabolic rises. This time we had it might feel parabolic to some over this, especially the last, say, 6 months or so. It has been a very, very sort of steady rise, and you had some days full dollar gains. This is a lot more steady in terms of approach to $50. It's a lot more sustainable. We had it meaningfully past $50, up to $54, as you said, and now still hovering near that level, even though it has pulled back. So very, very different kind of approach to the $50 level. And I've said that that was going to be a milestone, a huge milestone for silver. It had been until recently, till it took out $50. It had been the only metal that had not meaningfully surpassed its 1980 high. That's now the case, although again it has pulled back. But I do believe that it's going to regain 50. 50 will become a new floor, and for various reasons we can talk about, move considerably higher from there.
Why are our best metrics of demand consistently below the reality year after year?
I believe that these forecasting groups, they purposely try to remain conservative. They want to maintain credibility and not sort of over promise, so to speak. And so you're right. Yes, through the 2010s, we've seen that the IEA kept projecting 5 years out. Each year that they would project for the next 5 years, if you look back with the benefit of hindsight, they were off by 2/3. So installations were 3 times what they had been predicting. And this was year in, year out. So it is possible that solar installations in China could be slowing. I'm not sure about plateauing. Maybe at least the rate of growth is slowing. But there are some things to consider. First of all, you've got this, we've talked about this before, but you've got this new technology that's kind of taking over. These are acronyms, but the established one is was PERC. Now the new one is TOPCon. Already last year, I believe, 63% of new solar panels were being produced with this new technology. That requires 40 to 50% more silver per panel. The reason you would do that is because they're more efficient. It justifies the higher cost per panel. You're getting more energy output from that panel. So although the manufacturers of the panels, have been for decades thrifting and trying to reduce the amount of silver that goes into each panel, I believe that we're going to start to see that trend up. In other words, they will probably start consuming more silver per panel. It'll take some time for this to show up in the statistics, but I think that's what we're going to see. So that's an additional source of demand for silver from, even if demand stayed flat in solar panel production. Now you have this whole added layer of batteries. The cost of batteries and to store the power in batteries is falling and expected to fall by half over the next 10 years. We already expect for 2025 that we're going to see battery installations at 60% of 2023 solar panel installations. So that is really catching up very quickly.
The recognition of silver as a potential critical mineral is a turning point not only for policy, but for perception. For decades, silver was treated as a passive commodity, but now it's being positioned alongside lithium and rare earths as a metal that the world cannot function without. That changes everything, from how governments treat supply chains to how investors allocate capital. Let's consider what this means in practical terms. When a metal is designated as critical, it triggers an entire ecosystem of incentives and protections. Governments begin funding exploration and research, providing tax breaks to producers, streamlining mine permitting, and in some cases, guaranteeing purchase agreements. That's exactly what we saw with lithium. And look what happened to lithium prices and investment once it got that status. The same could happen to silver. What's particularly interesting is that silver's case transcends politics. Unlike fossil fuels or even nuclear, which tend to divide public opinion, silver's industrial importance appeals across the political spectrum. Environmentalists see it as essential for renewable energy. National security hawks see it as a strategic vulnerability, and investors see it as undervalued hard money. It's the rare metal that unites all camps, and it's not just rhetoric. We're already seeing structural moves. The U.S. Department of Energy's 2023 Critical Materials Assessment flags silver as one of the most at-risk metals for clean energy technologies, even before it was formally placed on the Critical Minerals Review list. They noted that no known substitutes provide equivalent electrical performance at similar cost. In plain English, you can't replace silver. That's why 43% import dependence is such a big deal. It's not just about trade balances, it's about sovereignty. In a world where supply chains are weaponized and trade routes are politicized, dependency is risk. Look around the world and you'll see the same pattern. Nations are moving from globalization to regionalization. The West is trying to rebuild domestic supply, while the East, led by China, continues to consolidate control over key materials. China dominates refining and processing for virtually every strategic metal, from lithium to rare earths to copper. It's no different for silver. They're the world's top consumer, a major producer, and increasingly a hoarder of physical bullion. That's why physical silver demand has exploded in Asia. The retail frenzy in China and India over the past year has been stunning. In Shanghai, bullion dealers report record sales. In Singapore, lines form outside precious metals shops. In Cairo, citizens are converting savings into silver because they no longer trust the local currency. It's a global phenomenon, a grassroots monetary revolution disguised as investment demand. Meanwhile, Western investors are only starting to wake up. SLV's holdings, as I mentioned, bottomed out mid-2023 and have been rising since. That's not retail traders chasing momentum. That's quiet institutional repositioning. They're reading the same structural signals, deficits, deglobalization, and the slow but steady reclassification of silver from luxury to necessity. Let's zoom out to the numbers again. Global annual silver demand is roughly 1.15 billion ounces. Supply is around 1 billion. That 150 million ounce shortfall isn't a temporary imbalance. It's been persistent for years. Cumulative deficits are eating through above-ground inventories. Mining output is stagnant. Recycling is stagnant. And even at $50 silver, it's not easy to increase supply quickly. Why? Because most silver comes as a byproduct. Unless copper, lead, and zinc mining ramp up dramatically, silver production won't increase meaningfully. And even when prices rise, it takes years for new capacity to come online. On the other hand, demand is flexible. It can surge overnight. If silver does get added to the U.S. critical minerals list, it will attract new categories of buyers. Government stockpiles, industrial strategists, and ESG funds looking to align with the clean energy narrative that would create a new layer of demand on top of already record consumption. And that's before we even consider what's happening in solar. Solar power now consumes 20% of all silver mined globally, but that's just the beginning. According to Bloomberg NEF, global solar capacity is projected to double again by 2030 and triple by 2040. If silver usage per panel rises even modestly, demand could exceed 250 or even 300 million ounces annually within a few years. Now add in electric vehicles. Each EV uses about 60 grams of silver, roughly double the amount in a traditional combustion car. As EV adoption accelerates, that's another major driver of demand. The math is simple but staggering. Solar, EVs, and electronics alone could soon consume half of all global silver supply. That leaves almost nothing for investment, jewelry, or coinage. And here's the kicker. All of this is happening before the general public has even joined the party. We haven't seen mainstream Western investors pile into silver yet. When that happens, and it will once inflation reaccelerates or fiat confidence erodes further, we'll see the same kind of physical shortage we saw in 2020, only much worse. Bullion dealers are already feeling the strain. They're struggling to keep stock. Premiums on coins and small bars are climbing again. In some Asian markets, silver is trading at 10% or 15% above global spot. That's the canary in the coal mine. And the miners, the ones who can actually expand supply, are finally waking up. For years, they hesitated to invest, scarred by the volatility of the last bull market. But now they're seeing something different: consistent, fundamental demand growth across multiple sectors. That's why exploration budgets are increasing. That's why we're seeing new acquisitions, joint ventures, and resource consolidation. The industry is preparing for a prolonged period of high prices. Silver is entering what I call its dual identity phase. It's both a precious metal and a critical industrial input, both an investment and an infrastructure metal. That combination is unique. Gold doesn't have that industrial tie. Copper doesn't have that monetary appeal. Silver bridges both worlds, and that's what makes it so special. In my view, $100 silver isn't the top. It's the base for the next era. Because when silver becomes recognized as critical, it's no longer just a commodity priced by speculators. It becomes a strategic asset, protected by policy, driven by necessity, and valued for what it truly is: the metal that powers the modern world.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.